Yeah. Yeah. So yeah, we'll talk about that. In fact, that happened to me today. All right. What day is it? It's Tuesday here in the United States of America, June 2nd, 2015. Welcome to your daily Forex trading strategy session. It's 2 hours before the New York Open on Wall Street. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. On behalf of the firm, thank you for being a client. I'm here to help. I'm here to guide. I'm here to share. You ask questions because you're the boss, and I'm your humble currency trader and analyst. Let's get going. Oh, Igor's talking about the Aussie. Yeah, make sure I cover that up. Hey, remember, trading and investing is risky, not appropriate for everyone. Your past performance, good or bad, however, it's not indicative of future results, so there's always hope. But tragedy always lurks around the corner. So therefore, play it safe, huh? Be small, humble, focus on the long term. Never risk money you cannot afford to lose. Okay, well, Igor talks about Aussie. Let's bring that up. Did Australia cut interest rates? Yes or no? No. All right, so why did the Aussie go? Yeah, well, we'll talk about that, Igor. That's because the statement suggested that they're not going to cut anymore. Okay? So it's the end. And remember, we trade not the headline news, but the expectation of future headline news. Now, it's funny, I was chit-chatting with a reporter from Bloomberg that covers the Aussie dollar. And, I don't know, this was probably 3 months ago. And I said to her, hey, you know, if you start to read some of the meeting minutes and then some of the speeches, if you go down to like paragraph 19, not the headline stuff, right? You'll see that Governor Stevens and his band of brothers, they're worried about a real estate bubble. And they've always been worried about one, but now this is the problem because if the ASX is going down, and everyone cashes out and goes to cash, what do they do with their money? And and in particular, if you're not going to buy bonds, if the central bank has slashed interest rates to an all-time low. So what did Americans do back in year 2000? They start buying real estate because it's the only place to park your money. Can't blame them. There's just nothing else to do. Now, the government would rather them spend it and spur the economy, but Australia is not necessarily, that type of economy, right? Australians don't tend to wear Bart Simpson T-shirts like Americans do, right? So, anyways, it's now a concern. It's a big concern, let's say, and you're starting to see it where the economy is not really improving, but they don't want to cut interest rates more. You know what? I think they're going to freak people out and cut interest rates again. They're just not telling us that they're going to cut. Remember how they said, hey, Aussie dollar should drop 1,000 pips? And it did. 6 months later or a year later, they said, hey, it should drop another 1,000 pips? And it did. They're not going to do it. So they're worried now. And what they're going to do is lie. They're just going to lie, but they don't really have much choice. So they want to bring they want to bring interest rates down. They want to spur the economy. They are worried about it, but they don't want the market to front run them. So, you know, so that's why I'm kind of guessing, that they might do it. But let's review what we've already done. Can you see this? We've already done this. It's not like I did this last night. You and I have already done this. And Aussie dollar fell to our gray zone and then went bullish. What's surprising about that? Is anything there a shocker? You look at it, right? We went from up here to down there. Hey, there, boo. It's time to buy the Aussie dollar. Yeah, Aussie yen. Yeah. Okay. So anyways, so there's two things going on there. Technically, that makes a lot of sense. That's a place where you expect to bounce. But fundamentally, things have changed a bit. And the statement after the interest rate decision was less bearish. In particular, not necessarily less bearish, just more concerned about the consequences of their actions, and a change in their statement, which suggests less cuts. Therefore, portfolios need to be adjusted. Okay. So you missed it. Fine. What should you do? That's what you should do. Came down 50% if you missed it. Free money. You've been taught, I don't know, 1,000 million times? Or like my kids say, 1,000 100 times? To do that, yeah. So that's free money. Yeah, nice role reversal. Yep. Cool, right? Question is, will it go up forever from here? Well, we'll find out, won't we? But remember what I was talking about yesterday, that it traded beautifully using technical analysis on the way down from 81 down. And I wonder if it'll trade beautifully technically on the way up from 75 or whatever it was, right? 76. Hang on, let me get my drawing tool. And then we'll talk about euro. I lost some money on euro. But it happens. Again, that's the risk, event risk that we've already talked about yesterday. Hang on, my drawing tool disappeared. Huh. Booted it up, it launched, and now it's gone. There it is. All right. Pause. All right, so let's see if I get a chart back. Okay, so what I was saying is, on the way down, Aussie was beautiful. It did this over and over again. You see how it dropped, made a lower low. Great, right? There's the roll reversal from the previous low. It came back. That's where you'd short, right? It made a new low. And just, it did that over and over again. This would have been your new short zone, sort of in here. And then, of course, look where we were right before the news. It was either going to go up or go down. But it was right in its spot to just go to the next level if it wanted to. Now, remember, the ultimate level was 75, right? Governor Stevens already set that floor. Here we are at 76. So do you see how some market participants would say, you know, there's 100 pip downside potential and an unlimited upside potential? Or at least back to 80, let's say. So there's 100 pips possibly down and 400 pips possibly up. Yeah, Igor says I told people last week that euro would is likely to go up. Well, that's not the yes, and it is going up. I mean, it's not a difficult call. I was just on the wrong side of the trade. Hey, it happens, man. Right? A gullible. Right? A gullible will believe anything, right? Yeah. Hey, well, whatever. Hey, I could lie to you, tell you I'm perfect. But anyways, so that's that. You know what is it interesting? You know what I was doing last night while I was trading? What do you do to pass the time? Here's what I did. I went to the Bank of Korea. That's the Bank of Korea. Let me go to the home page. It's a nice website. They got a lot of great information here. Okay, there's the Bank of Korea website, and I downloaded their regional economic report, and was just thumbing through their outlook for the Asian economy. Their just outlook for what's going on, and results of survey of major economic issues, and just beautiful stuff, right? Right? If you're not feeding your brain, then it's starving. You get it? Could you be doing more? If Forex is a zero-sum game, right? When you buy, someone else is short. That's it. One person's going to win, the other person's going to lose. Could you do more? Why would I read Korea's report? Because they have very smart, intelligent, highly educated people with economics background, PhDs, that are thumbing through economic reports and indicators and surveys, and they've spent, I don't know, $1 million producing this report to tell me what they think the near future is going to be and why. So that I understand what's going on in the Asian theater economically. So, but in Korea, you got a problem with you Koreans? I love Koreans. I love me in Korea. Seoul is great. I was hired by the Korean government to help them develop their venture capital industry. Been to Songnam City and Seoul, great towns, right? The thing is, if you can get your hands on a forward guidance type report based on global macroeconomics, where they've hired dozens and maybe hundreds of PhDs to work together and collaborate to give a near-term outlook based on logic and intelligence, and give it to you for free, you should read it. I don't care if you're from Timbuktu. Read it. No, I know, I'm bugging you, Buzz. Oh, but you don't trade it. Well, do you trade any Asian currencies? By the way, the Korean won is a great currency to trade. It's really good. But the thing is, I have to be smarter than everybody else, right? I mean, that's just what we do. You have to know everything and accurately predict the future every single day, right? So that's what I'm willing to do. It's not that big of a deal. But the RBA has great reports. Several of the Feds, the St. Louis Fed, for example, fantastic resources. They publish these things. IMF reports, fantastic. I do things like I download spreadsheets from the Bank of Japan in Japanese and try to translate it. But anyways, why not? I mean, you're a pro, right? That's what you do, right? Is it going to hurt? Let's say all you do is technical analysis. Is it going to hurt? You know, what's wrong, right? So anyways, that's honestly what I was doing. Maybe it messed up my trade, huh? So we'll go into that. So anyways, there's some Aussie. Let's see if I can reconstruct the euro. Shorted euro. What did you do? Yeah, I know. All right, let's start out why I didn't want to sell the euro. We talked about euro going up last week. Last week, right? Here we are going back Friday. The idea was to prepare for euro USD going up. What set that off was the oscillator here and the roll reversal here. Okay? Yep, I just transferred wealth to Armin. Hey, you're welcome, buddy. So anyways, yeah, so that was the idea for, or the argument for euro USD going up. Okay? But it hadn't yet. So it's a tough scenario, right? When do you switch gears? I tend to look for when the oscillator returns into the trade zone, which is that the zone between the lines. Okay, to me, this is the trade zone. Anything in there is fair game. Anything below that is oversold. Everything above that is overbought. So at that time, it was oversold, but not rising yet. So, I mean, you could argue all kinds of things. I could have been buying it. Maybe I should have been buying it. But I'll tell you what, the one thing that killed me was the CPI news. You know what I just realized? It wasn't euro. Sorry, I shorted pound. Sorry, pound dollar. So let's go over there. It wasn't euro. Same thing to me. That's why I get them mixed up. But I wanted pound to come down. But it's the same thing. The news took it out, right? Yeah, must have just been there. London Open. Shorted, yeah, right in here, I think. On the news. Let's see. Yeah, I'm pretty sure that was it. Let's change time frames. Yeah. See, in this thing in here got me. Okay, that's off. Check there. You know what? I don't know. It made sense at the time. It had to have been there. Turns out it was just a joke. Yeah, you know, it was great too because as soon as I pulled the trigger, it turned red. I mean, it just went red, 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 red. So this red candle is the London Open, and then yeah, so you can see, yeah, I caught it right in here. So overbought. You know, I don't know. Guess I don't know. Didn't. Oops. Didn't mean to do that. All right, so it sucked. I'm sorry. I thought there was something else in there. I can't remember. I thought there was a pivot or something. I don't know. Whatever. Sorry, Miss Jackson. What could I say? So maybe tomorrow, right? I bought the USD yen. Why would I do that? You can see I bought it exactly the low, 124.50. Change this to a 15-minute chart. Let's see. Oh, it was. So we had this scenario here. How it was, at the bottom of that cycle, bottom of this cycle, roll reversal. Okay. Now, if you're a bear, look where you sell now. Okay. So we got to be very careful because I believe we're in here. If it breaks to the upside, I'm golden. Why would it break to the upside? Well, the oscillator's in my favor. We're riding, I don't know what you want to call that, somewhere between the 21 and 55. If you drag this out farther, it's a roll reversal off of this area. Now, it certainly could have come down here where my stop is. So I'm a little concerned about that. But I can move my stop now, right? Okay. Do I always enter on a 15? I like the 15 because it represents 2 hours. I don't like being wrong an extra 2 hours if I can avoid it. Now, sometimes, like my trades last night, look where I live in the world. I'm sitting there trading the London Open. What time is it for me? Yeah, 3:30 in the morning. I'm up at 1:30 in the morning. I'm trading at 3:30, 4 o'clock in the morning. I got to go to bed, get a couple hours sleep, wake up, adjust my positions, review all the news. Oh, do a webinar with, 50 of my close trading friends. It's a tough gig, man. Sometimes I'm forced to be in trades without the best timing in the world, but, you do have to sleep, right? Eventually. And sleep deprivation can make you do funny things too. So sometimes I look at it, if I can catch the Stokes cycle, I'll try to wait for it. Now, if I can't, then I'll enter as close to support as resistance as possible when I think the oscillators are nearing the end of their cycles, but then I have to give myself a wider stop. Yeah, well, I don't know, it's just trading. I don't think there's anything special about it. If you're a currency trader in the United States, like when I lived in California, which is the other side of the country, my routine was 10 o'clock at night to 10 o'clock in the morning. That was my routine. I keep pondering what Hawaii would be like. London session probably starts at what, 11 o'clock 11 o'clock at night, maybe, probably even earlier, 10 o'clock at night. Is it 9, Aaron? Are you in Hawaii, Aaron? Oh, okay. Well, a friend is? Okay, because I think that'd be cool because, the other thing I've always wanted to do is do an annual Forex party in Hawaii, and like we all meet up and do some training, discussing and talking, and lots of drinks and cigars. But anyways, I'm in this trade. That's the idea. I think you could see what I'm doing, right? There's a a lesson in this setup, right? Even though I've already done it, doesn't it make sense? Like in here, we've consolidated, right? Then we've made a breakout. We made a pullback. I buy it. It's also a midpoint psych level, 124.50, and be long and strong. Well, Ron, that goes back a long time. It was something I just didn't do. Got close a couple of times. There used to be a close, a good trader friend of ours that lived in Hawaii. He owned a bunch of bars and stuff like that. He was really cool. In fact, he set up his trading rig with like 6 screens outside. So one day, we're all trading, and a bird flew in to his computer screens. And you're like, yep, that's what happens when you trade outside. So anyways, the idea was we'd all meet up and, do like a... See, here's the other thing, guys. Once you're successful enough where you're making money, let's say you live in the United States of America, it's imperative that you incorporate your business because you're just taxed so much better as a business for Forex trading than as an individual. But it also allows you to write off business expenses to lower your taxable income, which is another fantastic thing. So if you had an industry conference with training a professional, you can write it off taxes. So hey man, if you want to meet up and I mean, think of it. How many times have I gone to Vegas and spent like $100,000 on a conference? I don't know, 7, 8, 9 times. I don't know. Same thing with New York. Yeah, business expenses, guys. So it'd be a nice thing to meet up in Hawaii, I don't know, in January when things are still haven't quite warmed up yet for New Year. We go out for an annual Forex conference. Just maybe like, well, they're doing Davos in Switzerland, right? They're doing Davos, Switzerland. We're doing Hawaii, preparing for the Forex year and doing business plans and stuff. So anyways. Anyways, all right. So, okay, I hope that's a lesson. I'm watching this on the 4-hour. You see how we're riding 21 nicely. This 25 is a big psych level, though. So, yeah, if it was going to fail, if the trend was going to fail, it may fail soon, but maybe it won't. Okay. So maybe we'll do a lesson sometime on incorporating your Forex trading business. I once brought in an attorney to speak with a group about doing that. It's fascinating. Yeah. I think one year my taxable income was something like 3% because I had so many tax write-offs. Yeah, which things up because then because I'm a business, I have to pay quarterly taxes. They're estimates. So I screwed that up. So for the first time in my life, I got a tax refund. I usually don't get those, and it was over. It was 6 figures. It was over $100,000 tax refund. Funny. How do you like that? When was the last time you received $100,000 from the government and you didn't sue them? I don't think you can even sue the government. Maybe it was the first time ever. Yeah, yeah, Ron. I guess if you're an owner, that kind of stuff can happen, right? All right, so let's. I know these are messed up, but let's go through this. You see how I have the charts all lined up? It's because of several things. One, I'm looking for correlation. The common denominator on all these pairs is the Japanese yen. So when I'm looking at this, I'm asking myself, are the pairs going up Don't even say it, but I have, but not with them. But anyways, all right. Is the Japanese yen going up, or is the Japanese yen going down? And I like to have a clear answer. I want to see them all going up fast and furiously, or I want to see them all crashing. If they're moving sideways, then what it'll also tell me is one of the other pairs is different than all the others. So like Euro Yen is basically up, USD Yen is basically up, Aussie Yen is basically up, Kiwi's kind of sideways, CAD is not so much up, not like Aussie, and Pound is pathetic, right? So I can see right away, relative to the Japanese Yen, the Pound is quite weak. Okay? The CAD is moderate. The Kiwi is fairly weak. Can you see that? Euro's fairly strong. Dollar, not so much. It's not that great. It has been stronger, but right now not that much. And Aussie's quite strong. Okay, I can look that just by looking at this. So I can tell you what the yens are doing, but I can tell you what the other currency pairs are doing. Now I have some proprietary stuff that I had programmed, and this is something I just keep running in the background. It doesn't really put me in a trade, but I don't know, it's eye candy. And they're indexed. So I've made indexes of every currency. So this is the pound versus all currencies. This is the euro versus all currencies. Swissy versus all currencies, right? And so I just went through the Japanese yen pair. I opened that up. And it takes me a little longer than just looking. So the ones I actually created an index. So it's actually looking at the British pound versus everything in the dollar index. Fine. So that's an actual index, right? Now I'm looking at this. It's a relative strength exercise. It takes me longer than 1 second. It takes me 8 seconds. And I can get all the same information. Yen is moderate, Euro strong, Aussie strong, dollar's moderate, pound is weak, CAD's moderate, Kiwi's weak. Done. Yeah, Justina says uses a currency strength indicator. I've tested many over the millennia, and the problem is a lot of them I can't figure out how they're doing the math. So I like to understand what it's doing. Okay, and on what time frame is it strong? Daily? 15-minute? Well, what if I'm not? What if it's telling me all that the dollar's strong because of what it did yesterday? You know what I mean? No, Igor. It's not that I compare it to yen to do that. I'm always looking at it. So in this case, I'm looking at this to say which yen pair should I buy or sell first. But I could also, while I'm doing that, I can look at it and say, oh, well, look, pound's weak. I wonder if I should sell pound dollar. Oh, but dollar's weak, so forget it. Okay. But I just, I can do the exact same thing on this. Okay. And I'll say to myself, is the dollar strong or is the dollar weak? Well, the common denominator is dollar, but on the top pairs, the dollar is on the right. The bottom pairs, the dollar's on the left. So for this to be correlated, let's say dollar's weak. Because I'm picking on Euro USD going up, right? So if they're correlated, this should be going up. Is it going up? No, not really. Why? Because we already discerned the pound is weak. We already discerned using the charts that the euro is strong. Okay, so that out, yield. And then Aussie dollar's going up because we know Aussie should be strong. Certainly was strong earlier. Now for this all to work out, USD Swiss franc, because the pair is on the left, if it's correlated with everything else, if this is a dollar related move, USD Swiss franc should come down, USD yen come down, okay? CAD should go down. That would be the perfect correlation. If you don't see the perfect correlation, so like I have USD yen kind of going up, and USD CAD still looks more bullish than bearish, although the oscillators rolled, then you just don't get perfect correlation, and then maybe it's not a dollar move at all. Maybe dollar's neutral. And then you could say, oh, well, maybe I shouldn't trade dollar today and find out what's going on. Is it a euro story? Okay, good. Then you open up the euro charts and you try to isolate strong versus weak and all that kind of stuff, okay? So that's how I use that. Oh, and I could see how it just brought my stuff down. I shouldn't have done that. So I could say, well, maybe it's a euro story, and I go to this chart. Do you check the USD index? Well, I can. By the way, multiple bomb threats against U.S. aircrafts have been reported today. Traveling to the U.S., yep. Ooh, that could bring the stock market down. Nobody likes that. So anyway, so now your common denominator is euro, and you think euro is strong. Do we want to trade euro Aussie? Maybe. We had that as moderate. Do we want to trade euro CAD, let's say? This is euro Kiwi, but let's get our euro Swiss and change it to euro CAD. And oops, the answer is no, we don't want to trade euro CAD. There it is, because our relative strength exercises have already told us CAD is fairly strong. So we want something weak. Euro Kiwi is quite, or Kiwi is quite weak, based on our analysis of relative strength exercise. So this would be one that's more likely to go up. And as you can see, you could have already had that trade of the higher high. So there's the breakout, retracement, gone. Cool, huh? Look at the oscillator. Nice. Interesting, huh? Do we have any news on the calendar today, guys? Okay, well, Igor, we're just doing relative strength. If it's confusing, don't do it. So we got some factory orders coming up. But not till 10, right? Yep. So again, maybe I didn't say it very clearly on how to do the relative strength. So I'll just do another just brief view. If I'm looking at yen, I want to see that all the yens are doing the same thing. So here's the yen now from a different point of view. The yens are all going up or all the yens are coming down. I have my direction picked. Okay? Then so let's say they're all going up. All the yens, generally speaking, make sure they're on the same time frame. This one's not, so I got to change it. Let's say generally speaking, you thought they were all going up to some level, to some degree, right? They're going up. Okay, so let me back out. Okay, but are they necessarily going up at the same rate? No. Because the yen might be weak, but another currency that is relatively weak as well might be going up because the yen is weaker, but it wouldn't be going up very fast because the other currency is also weak. It's not as weak, but still relatively weak versus everything else. Now, another currency pair that just happens to be strong, like right now, euro, then it's going up, and it's going up a lot faster. So, the two things to pay attention to is what's the general direction for the yen? If all, or the yen pairs, if they're all going up, the yen is generally weak. If they're all going down, the yen is generally strong. Now, if some are going up and some are going down, or then the yen is just not doing anything. It's not important today or at the moment. If three are going up and one is moving sideways, then we've learned a lot. One, the yen is generally weak, and two, the currency pair that's being traded against the yen on the pair that's moving sideways, that pair, let's say CAD yen, that would tell me that CAD is also weak. So let's say my first trade here could be euro yen long, and then I could go over to USD CAD and say, well, I think CAD's weak from what I see on the yens. So I wonder if I have a setup on USD CAD so I can sell the CAD versus dollar or something, right? So I'm learning stuff. I'm learning that the yen is weak, but I've also learned that the CAD is generally weak as well. So it just guides me because my job isn't just to trade, but it's arbitrage. Arbitrage is the simultaneous buying and selling of an asset, right? A similar asset or the same asset. Well, in this case, when we make a trade, we're buying one currency pair and selling the other. Or actually, to say it differently, let's say I'm long euro yen. What I'm doing is I'm using US dollars to purchase Japanese yen and then converting that into euro. So I'm borrowed yen and then traded that to purchase my euro. So, right? So there's two things going on. I'm exposed to the value of the yen and I'm exposed to the value of the euro. So you should know, relatively speaking, which pairs are strongest, which pairs are weakest, and ideally you're borrowing the weakest and converting that into something that's the strongest. And in that perfect world of pairing up the strongest versus the weakest, let's say the likelihood of the of you making money or the trend continuing is highest. So according to your words, we should look at Aussie pairs as Aussies. If so, from your analysis of relative strength, this relative strength exercise, if you believe Aussie is relatively strong, and I actually mean that, relatively strong, relative to all other currency pairs that you're observing, or relative to some of the currency pairs, then you take that and find some weak. Okay, so another way of looking at it is, let's say you look at all of this and you say, okay, the Japanese yen is weak. I want to buy Aussie versus yen. Let's just say that's the conclusion you came to. Boom. You're long Aussie yen. You start making money. Good. What's your next trade? Are you going to buy Aussie yen again and double up your risk? Or would you like to diversify your holdings? So now you might say, well, Aussie's ripper strong. I'm making money on this Aussie yen. I wonder what I should do now. Euro Aussie, right? Pound Aussie. Aussie versus US dollar. Aussie versus Swiss franc. I wonder what the Kiwi Aussie's doing, right? And you start doing your analysis there, finding your next trade. Again, you're trying to find the weakest currencies and pair them up with the strongest currencies. That's why sometimes I'll say, hey, I'm open to requests. What do you want me to cover? And someone says, I don't know, Euro Kiwi or something, or Aussie Kiwi. And I'll say, what? But they're both weak. Why would I do that? I'm not interested. I'll say that, but it's true. Why are you trading a currency pair where both currencies are weak or both currencies are strong? And I'll just like, well, I don't want to do that. I don't want to even analyze it. Why would I waste time? I might actually like my analysis. I might actually see a pattern to trade, but it'd be a bad trade to be in. Well, let's say a weak currency versus a strong currency is likely to move well. A weak currency versus a weak currency is not likely to move at all. A strong currency versus a strong currency isn't likely to move at all, or could suddenly, because one of the currencies just went from strong to weak, and it just pops, and then comes right back. I mean, so they're just bad trade setups. Okay. Well, Ron, you're right. He says it comes, it's part of the strategy process, but it comes into what currency pairs you should even consider developing a strategy for. You see what I mean? I do this when I'm trying to figure out what I'm going to trade today. I already know what my fundamental bias is on all of these. So I kind of know what I want to do. I just don't know when the setups are going to occur. So I look down, let's say it's pre-London, I'm looking around, I'm like, oh, what am I going to do today? Well, I already know bias, so I have my strategy set. And then the next thing is sort of timing, right? I'm in the pre-London. This is, sometimes I don't get the opportunities I want. The timing is off. But I know that because I look at relative strength and I say, what has been strong for recently, you know, what through the, let's say the entire Asian session, what's been weak throughout the entire Asian session, what would I like to do? Would I like to sell euro dollar? Okay, well, is the euro strong right now? Is the dollar strong right now? What's going on? Are we at resistance? Are we at support? Where are the oscillators? You know, and it's all kind of coming together. Oh, it doesn't have to be 1 hour charts. It could be 4 hours. And say, and be fine. Okay. But it's got to have enough time factor, Igor, so that you can see like what a trend is. If you're looking at 5-minute charts, there's no trend. And they're going to be like, all of a sudden, CAD will be strong for 17 minutes and Euro will be weak for 22 minutes. And you'll never be able to line them up. A 5-minute chart is when you've already developed strategy, you've already found the relative strength, you've already made the decision on the pairing, which pair you're going to trade, you've already identified support and resistance. On a medium-term time frame, like a 15-minute or an hourly chart, the oscillators are already lined up. Now you're just going to pull a trigger, you've dropped into the 5-minute, and you're ready to go. Right, so you're not doing relative strength on a 5-minute. But a 1 hour or 4 hours, pretty good. Daily is probably a little too slow because remind yourself what you're asking the market. What's been going on recently? What is relatively strong now? What's relatively weak now? Not over the last 4 days, because it might have changed. Not 8 minutes ago. But just kind of, you know, let's say throughout the Asian session, who's been strong, who's been weak. Throughout the European session, who's been strong, who's been weak. So you're kind of looking back a while, but it doesn't have to be too long, but it shouldn't be too short. 1 hour, half hour even if you want. I might be all right with that. It's not something I generally do, but why not? Okay, it's enough. That's all I'm asking for, isn't just recently what's been going on. Okay? So you can see pound yen mostly sideways, CAD yen mostly sideways. Right? Can you see how CAD is trying to head up? Does pound look like it's heading up or trying to head up? No, CAD is stronger than pound. See? Now you just do it in a second. Euro strong, Aussie strong, CAD is turning up, gaining strength, pound is weak, and yen is generally weak. Almost neutral. Just boom, 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 boom. So now you can say, oh, Euro strong. Oh, Aussie's strong. Whatever. Oh, CAD's weak. Right? You can look at that and just go, oh man, I wonder what Euro pound's doing. Boom! Should be ripper. Boom! Ripper. Okay? So after doing this for, I don't know, 10 or 2 years, guys, you should be able to look at my yen scan and see Euro. Just be able to see it. Right? Wouldn't that be great if I gave you that yen scan and say, now draw the Euro pound? And you're like, well, how would I do that? Well, you got all the information there, right? You know what the euro is doing versus the yen. You know what the pound is doing versus the yen. Why can't you figure out what the euro is doing versus the pound? The information is there, right? So after a while, you just need to develop the skill to be able to see that, because once you can, then you're jumping to entirely different currency. You're like, oh, look at all that. I wonder what the euro pound's doing. Boom, and you're on euro pound. Any questions? Everybody's got it? Yeah, Ron, what you do is you set up a profile, right? And then you have all these profiles ready to go. So I got all kinds of profiles ready to go, right? Hey, I wonder what the stock indices are doing. Well, Igor, I think a lot of the trading problems that newer traders have are very similar to what golfers have problems with. The most important thing a trader can do is make a decision. I don't think you need all these details. I've said that over and over again, right? I think all the details are there and you can learn to read them. Okay? And the information's important, but at the end of the day, you don't necessarily know. So what's missing for most traders is they just haven't made a decision, so they're going to the market, looking through all this data, hoping the market tells them what to do. I wonder where the trade today. Fail. Okay? Golfers tend to make a very simple mistake. Golfers that have been golfing for 5-10 years, they can hit the golf ball. They can play around, right? Maybe even break 100. But what's the problem? They don't aim. Boom! Oh, that went left. Yeah, well, you were aiming left. You hit it straight, dude. Straight left. And it's a very interesting phenomenon, right? They pay attention to everything except aiming. Oh, is their left arm straight and all this kind of stuff. Everything but aiming. Well, aiming is a little bit important. And having a bias is similar to aiming. You want to buy the dollar, yes or no? I don't know. The market's going to tell me today. Every day it's a crapshoot. I'm waiting for the sign, right? Pre-London, what are you doing? I'm waiting for the sign. And what's the typical sign for an amateur? London opens, 3 giant green candles. What does the amateur do? Buy, buy, buy. Ooh, it must be going up today. And what happens? Red, 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 red. Wipeout. How many times have you seen that? Like every day, right? Yeah. Well, that's because, I don't know, they're trading on a wing and a prayer. By the seat of their pants. I don't know, they're waiting for the sign. I wonder where it's going to go. The market is not going to be friendly to you. I mean, that pop and drop at the London Open, it's crazy. It slaughters amateurs. Yeah, well, they deserve it. Good. You don't have a plan, you deserve to lose. Good, thank you. Because if I have a plan, you just transferred your wealth to me. Hey, I didn't do well today. I thought I had an okay grade. I was in that situation where it was 50-50. I probably should have taken a walk and just gone to bed. But you know what? I love doing what I do. So But what about someone that never has a plan? Oy vey. Yeah, you do get what you deserve most of the time. You don't have a plan, you're going to lose. Thank you, my friend. Right? I'll put your portrait at the bottom of my pool in gold, in gold little tiles, in gold motif. Yeah, liquidity event. I forget where I read it. It was been a million years ago, but somewhere I read it. But it was a professional being interviewed about trading, and I don't know. I can't. I have no idea what I was reading, but he called amateur traders a liquidity event, and he just summed it up perfectly. Right when he's getting out of his position for huge profit, some idiot is paying for it. Someone's got to be wrong. Might as well be the guy with no trade plan. Yeah, well, there are days you're going to be wrong, right, Igor? There are going to be days when you're wrong. This is why your winners should be larger than your losers. And this is, yeah. So, anyways, that's why we do what we do. Any other questions? There wasn't any news today. So it's a while yet. The next news, so don't need to cover any of that. Right. The important thing overnight, besides the Aussie news, was the CPI was a little higher out of Europe. And that's what caused what you see here. Oil's going up as we thought. Remember, we planned on it coming down, and then it would go up and then come down again. Remember? Look how it came down to the 55 and is rising, just like we said a month ago. Incredible accuracy. It's really cool. Remember, it's not me. It's just the analysis. It's just what the charts told me. I'm just the translator. Look at that beauty, huh? Look out right into the target. Taking our time. Wonder if it'll make it all the way up. That'd be cool. It's pretty overbought now, isn't it? Four hours already coming around. Daily is, wow, that's really overbought, huh? 92% overbought. Wow, cool. I mentioned it yesterday, and I should probably say it again. June 1st is historically, at least at one point, was peak oil for inventories. And that oil prices tend to go up from here. Wayne, how are you getting those gray lines? What? I just grabbed Dre. See the drawing tool? One way you could do it is insert shapes, rectangle. Or you could add shapes to your toolbar, and you can just add them like this. All right. Here's a triangle. Here's a rectangle. Oh, how do you add those? Right click your chart, one click trading. Okay. Easy peasy lemon squeezy. The very top left, yeah. Well, I just right click. Yep. Hey, anything for you, Igor? Can I help with anything else? Very happy to chip in. We're basically at the end of the session today, but are there other things that you're working on in your trading that I can help with? News trading. Just, oh, Mike's reading the book. Right on. Cool, Mike. Remember, it's the part of the journal that I think is going to help the best. When do you start planning? Well, the thing is, Igor, if I have a bias, it doesn't change very often, right? So most of the time, strategy is already set fundamentally. Then technically, I use like daily charts, for example. So how did I say Euro USD was going to go up? You guys remember that? I said it on Friday, right? Oh yeah, Oscar, I should have done today. I'll try to get like another hour's sleep, and then I'll go back to writing. So how did I know? I don't like saying that, but how did I know Euro USD was going to go up on Friday? Right? I used the daily chart. It was oversold, and we're at support. Done. Easy. Right? How long did that take me? Not very long. So you use that information, and then you drop into smaller time frames. Now, I would like to have this head down, but I ain't going to do it here. It might have done it yesterday, but we got the good news out of Eurozone and allowed this to go up. It could have just sort of kicked up this 5, and it was a 21 on a smaller time frame. It could have come down, but it certainly is doing it now. So really, maybe for the end of the week, I might be a buyer for a while, or just not a seller. My next area of concern is going to be in here. So there could be a room for, let's say, this. So maybe next week, I'm selling Euro USD again. Maybe. Okay? Because if I'm fundamentally bearish, let's say on interest rate differentials and various other things, central banking policy divergence, then I could say, well, I sold down here in this red candle. I was profitable for an hour or so, and then it failed. My next plan is to sell it up here. Yeah, yeah. Mike's wondering. Good point, Mike. He's talking about the 2155. Okay, is that a sell zone? Yeah. Okay, so on a smaller time frame, you might want to look for something like that. Okay, but you're right, Mike. Absolutely. I'll let someone else reverse it though. Okay. This 15-minute chart, could you wait for a double top? Yeah, you could. And then say you're kicking off to 21.55. So something like this. Okay. But then it's going to 21. And then it could possibly rise and make a higher high. So I'll say at least triple top. And then it would have to make a lower low to the 55, but it's not likely to do that in one shot either. So then it's going to come down, and then we'll range first. Then we'll kick off the old low, and then it's got to go to a high. And then you got the hourly chart, so which means now you got to swing here. So you got to come up, let's say 50%. So again, off that neckline. So we're really talking tomorrow's trade, right? Because you got to add different time frames to it, right? So imagine, for example, it did this part here. So it on an hourly chart, that would be a double top. Even though it double topped on a 15-minute, on an hourly chart now, you have to think about it. Take out, there's a lot less candles, right? So on a this would be 2 candles, and then this would be 2 candles. So then this would be the double top. Then it'd be a lower low. Now it's got to do its 50% Fibonacci retracement. So you have to look at this low to that high to here, which is again a roll reversal off of there. So the blue areas are actually the hourly chart. So you get all this price action, and you just have to draw the price action on the 15-minute chart that would help fulfill the pattern on the hourly chart. And so from here to here to here would produce a lower low, which would be to here. Okay. Well, it's not confusing, Mike, if you start at the higher time frames first. If you start at low and go to high, and it's more complicated. But again, if you've already decided this is going to go down, how is it going to go down? That's it. Now, you can add more layers of complexity, but where people fail is just the decision that it's going to go down. So if you think, Mike, that on the 4 hour, the 21.55 is going to act as resistance and then push this thing down, you should, maybe not now, but you should work toward observing. So let's say don't even trade it. Observe and pay attention and maybe print out the charts and really focus on if it does reverse based on the dynamic resistance on the 4 hour, how does the price action behave on a lower time frame like a 15? Remember, that patient, that unbelievable focus is what's going to make you a better trader, not just throwing down a bunch of trades. Most amateurs think making lots and lots and lots of trades makes them a better trader, and it doesn't. So making the decision here saying you think the 21.55 might act as resistance, good. I get what you're saying, and I agree that it has potential. So how will the 15-minute chart behave if you're right? And observe it. Watch it, pay attention to it, print it out, review it again at the end of the week, now that you've seen the follow-through, and compare it to other scenarios of similar situations, so on and so forth. Okay? Peace on earth. May the pips be with you. May our profits be above average. And I'm already looking forward to tomorrow's session with you. And hopefully you leave a comment or a like, or even both, Derek. YouTube.com/C/TradersWay. Again, I hope it helps, guys. Thanks for being a client of TradersWay.